We have Manoj Menon, Head Institutional Research, ICICI Securities, joining with us to talk on the paint industry in particular, because there's a lot of fluctuations in the decorative paint and overall paint industry, and one needs to have a quick know-how of what's happening there. Thank you so much for giving your time, Manoj. Good morning. It's a pleasure talking to you this morning. Mansi, this side. My first question to you will be on the demand front. How do you think is the current demand trend in the decorative paint segment compared to the industrial paint? What is the sector doing at present, and what is your reading for the sector in particular?
Thanks, Mansi, for having me today. So look, we cover actually all the 5 paint stocks, right from an Asian Paints to an Axon. And the broader trend, what we've actually seen, over the last 1 year, I would say, not just 1 quarter, is that the demand actually has been soft. And there has been different attributions, for it. One, for example, like generally speaking, discretionary consumption has been a little softer, and paint, I don't think, is an exception to that. That's point number 1. Point number 2, when it comes to the 1Q FY26 specifically, unseasonal rains has definitely impacted the, let's say, the ability to paint, particularly on exterior, etc. Point number 3, let's say when you look at the paint industry growth, it's important to also include Birla Opus, which is the newer entrant, right? So if you actually add the growth which Birla Opus has garnered in the last, let's say, 6 to 9 months, it does appear that the industry growth is in, let's say mid-single digits. It's not really as bad as, let's say, the headline, results of the illicit industry, kind of, let's say, would convey.
Right, and Manoj, that's exactly the point I wanted to take ahead. Hi, morning, this is Snehi joining in. Now, the flavor of the entire paint sector of late has been new entrants. It's been a hike in competition. Help us understand how this momentum has played out and how is market share shifting between the large incumbents like Asian, Berger or Nerolac and new entrants like Grasim's Birla Opus that you were just talking about.
Yeah, sure. Thanks. See, if you actually look at the impact created by Birla Opus in the first year of, let's say, operations, which is FY25, and spilling over into the 1Q FY26, this kind of coincided with a certain one-offs which Asian probably had gone through last year. If you look at the revenue performance of Asian, it has been in, let's say, in some quarters in September, December, etc., has been, this material decline. So to that extent, I think Birla Opus has performed, I would say, exceptionally well, in the first year of operation. But when you look at the impact on the incumbents, it appears that the material part of the impact actually has been with Asian Paints, because being a 50% plus market leader, and relatively lesser for a Kansai Nerolac or a Berger or an Axon or an Indigo. That's what our take is. Incrementally, our sense is that there will be some stability in terms of the competitive activity and intensity, let's say 6 months from today. Once the let's say Birla will actually have to lap the higher base of last year. Just one last point I'll highlight here. If you actually look at the paint industry, there is about 1 lakh, let's say dealers or distributors who actually sells paints. Asian Paints with a 50% plus market share reaches about 90,000. Okay. Birla Opus with a high single-digit market share in paints. If you add putty, probably nudging double digits. Or let me put it this way: Birla Opus with a 1/5 or lesser scale of Asian Paints already has got a reach which is 50% of Asian Paints today. So I think they have done a brilliant job of reaching the distributors, dealers, etc. In the phase 1, or rather in the first year. I think the bigger task is actually get the throughput. So to that extent, yes, it is fair to expect a certain deceleration 6 months from today for the incumbent. So it stands corrected for the insurgent, for the newer player.
Right, Manoj, I was just going to ask you on that. But Manoj, I want to talk to you about one particular stock, and that's Asian Paints. When we had new entrants, this stock took a beating. Then once again, the earnings were not very good previously. But if you see the Q1 earnings, the volume growth for Asian Paints has beat expectations. Do you believe, amid everything that's happening and all the mentions that all the factors that you mentioned in your first answer, do you believe that Asian Paints somehow now is once again finding its feeting and maybe a recovery is on the cards?
Absolutely. Actually, in fact, that's been the thesis for our upgrade, rather a non-consensus upgrade of the sector, sometime back, pretty recently rather. That we do believe that the big impact of the insurgent, if I can use that word for Birla Opus, is already, let's say, materially done with. And then obviously, ultimately, we're talking about a stock, right? I mean, so one is a business, second is a stock. So let's say the stock trades, or rather, used to trade it till recently at about -1 standard deviation. the margins of FY25, is a decadal low, etc. We do very strongly believe that the let's say the worst is behind, as far as incumbents are concerned, not just for Asian, for the entire paint industry.
All right, Manoj, now whenever we talk about a sector which is into consumption, like a paint sector or an FMCG for that matter, we talk about the urban versus the rural demand. How do you think is the demand in urban and the rural market shaping? And could you also share some color on the demand front? How has July and August shaped up so far?
Look, team, the general comment from most of the consumption categories which we cover, which is right from FMCG, to building material, to retail, to restaurants, and on and on. The general commentary actually has been that rural demand appears to have bottomed out, right? At least it's not decelerating anymore. And in certain cases, it seems to be showing some green shoots. Now, look, you can actually have attributions. Is it to do with lower inflation? Is it to do with better wage growth? That's obviously time will tell. The fact of the matter is that companies are finding rural demand to have bottomed out and incrementally getting better. And almost like 8 out of 10 companies actually would have commented that they expect the second half of FY26 to be better than the first half, right? Largely to do with the fact that rural is getting better. Second point is, in the last 1 year, we have actually seen urban, which was otherwise performing well till FY24, has actually decelerated materially. Again, attributions, is it higher inflation, maybe lower wage growth? And you read about, for example, let's say, information technology companies not necessarily adding material headcount or let's say such headwinds, etc. Those are attributions. The fact of the matter is, urban, which has decelerated few months back or a few quarters back, kind of largely remains in that zone where there is an expectation that it can get better. That's the commentary from most of the companies, and we largely agree with that. Coming to the specific aspect of paint, I just want to add a small quirk here. While it is not a fundamental aspect, but something which you observed and we wrote on this, some time back. If you look at the last 10, 12 years of paint industry and let's say and define anything more than 5% as good growth, industry growth, and anything less than 5% as, let's say, an underwhelming growth, it's interesting to note that, there is a 2-year pattern. For example, there are let's say every 2 years, industry grows more than 5, followed by, let's say less than 5. For whatever it is worth it, FY24 and FY25 has been less than 5% industry growth, which to that extent, statistically, one can argue that FY26 and 27 should be good years for the industry.
All right, that's an interesting stat and a trend that you have followed, and let's hope for that as well. Hi Manoj, morning. This is Shrishti also joining in. But Manoj, paint as a sector was a bit of an unorganized sector rather, but of late with so many new competition kicking in, how do you see the organized versus the unorganized ratio shaping up going ahead, given the fact that now not just the big players are seen to be entering, but there's a lot of consolidation that has already taken place?
Thanks for asking that question. So if you actually look at the, paint industry, or for that matter, most of the consumption industries or categories in India, look, obviously, the reality of life in India, if you're managing a business in the formal way, is that there is an informal sector to, let's say, to contend with. Now, to be fair, if you look at the last 15, 17 years, the trend actually has been that of formalization, right? Now, starting with, let's say, in the late 2007, 8, 9, etc., when the state VAT got implemented, then post with GST, the trend actually has been that the formal players has been outperforming, right? Now, as far as our checks goes, because, formal versus informal is honestly a difficult question to respond, because there is no statistic as such on the informal segment. It's all what you do is channel checks and your network checks, right? Our sense is that informal is reasonably active. And having said that, in the last 1 year, yes, the dipstick would tell you that the informal has probably lost out to, the formal players, simply because, there is significant price competition. One of the important levers which informal sector has got, let's say, to convince the consumer saying that, look, you buy this XYZ brand versus, let's say, a large national label, is actually price, right? It's not necessarily quality or availability, just the price, let's say, differential, particularly in B2B segment. Now, given the fact that if you look at Asian Paints, for example, which used to be in the mid-20s operating margin, they've dropped it to 17-18%, right, in FY25. And Birla Opus obviously probably currently operating at a marginal loss, because their reported results, which includes paints, that one segment is still minus 300 crore EBITDA, right? It's not just paints, it's paint plus the B2B business, what they actually have, right? I mean, so the context what I'm trying to tell you is that the profit pool reduction in the industry kind of should have, let's say, limited the growth for the informal segment the last 1 year. So that's a fair assumption to make currently.
And Manoj, before we let you go, just want to get your quick thoughts on two of the new names that we're seeing right now. First up, recently, JSW Paints has acquired Axon. Help us understand what's your view on this. And secondary, just very quickly want to understand the kind of secondary sales we've seen on Grasim's Birla Opus and any market share number if you could help us with.
The first one, look, we, as I said a little earlier, that we actually cover Axon India. And, we have been a big believer of the management-led turnaround led by Raju Rajagopal, who's the MD and CEO in Axon. And the team has done brilliantly over the last couple of years. Honestly, as an analyst, I use those adjectives very rarely. And this happens to be one of those cases when, despite being an MNC subsidiary, you have percentage margin targets, you had a lot of challenges. And despite that, in the last 2 years, Dulex brand and Axon has actually been gaining value market shares, right? So the trajectory is right. So the JSW takeover comes at a time when the company is somewhat, I would say, getting the momentum as far as the business performance is concerned. Now, logically, when I extrapolate the performance with what we know from JSW Group about the listed entities, what they have done in various other businesses, it's a very fair assumption to make currently that this can only get better, right? So our optimism on Axon outperformance continues. As I said, because it's already been performing better, and it has actually gone to a group which otherwise is very aggressive and which has sort of invest for growth. That's what the template we know from the other JSW Group companies, right? So we are very bullish on that. July and August, while we have not done much checks as such, because honestly we've been too busy with all the results in the last 15 days. The company commentaries, right, it actually largely suggests that July has been a tad better. August, even companies expecting it to be better, and going to September, given that there is an early Diwali, etc., most of the paint companies are expecting a very strong second quarter.
It was really nice talking to you, connecting with you, and knowing your analysis on the Indian paint industry. Thank you for joining with us.
Thank you.